And so now we hit upon this new stage where we realize we have a commodity that returns more than the S&P index that we can buy by selling our stock. So if you're an investor and I give you a return higher than the S&P, how much capital are you going to give me? Infinite. So we started doing that, and we sold $1 billion of that. And the short of it is we went from a $500 million investment to $10 billion of capital raised, and the stock, went up by a factor of 10 or 20. And then we got to 2024, and 2024 was by the way, I skipped the crypto winter where everything crashes from 66,000 to 16,000, but this is a half-hour podcast. So I'll just say it was a roller coaster. We went up to 66, down to 40, up to 66, down to 16, back. But and that's all very colorful. But the real point is we're buying Bitcoin with equity, with debt. We're refinancing the debt. We're at all points, generally, we're doing it in an accretive way. And we get to 2024, and then we discovered the value of volatility. I mean, really understand it. Because in January of 2024, Bitcoin isn't an asset class. And the second week, the SEC approves those ETFs. And then you start having the snide comments like, well, now we don't need MicroStrategy anymore. They're like just a proxy. They're like a clumsy ETF substitute. We'll just put our money into the ETFs. But what happened at the same time was the halving was coming, and all of the investors, the vol traders, went through a secular rotation, and they started selling the Bitcoin mining stocks and looking for something else to trade. So if you track the liquidity in the options market and in the equity market, there was a major shift in Q1 and early Q2 where a lot of the volatility in the options traders and equity traders, they basically hopped off a dozen Bitcoin mining companies onto MicroStrategy because the Bitcoin miners were going to the halving where their revenues get cut in half. So when that happened, our options interest exploded and we became the number one options market. When the SEC approved the ETFs, they didn't approve options. Okay, so today our options market is like $95 billion. Our options market is the same size as our market cap. And then we discovered that the real strategic opportunity we had was we can construct a balance sheet of permanent capital with leverage. And when you take Bitcoin and make it 100% of your stock, you're going to trade probably, if Bitcoin is trading with a 60 vol, you're going to trade with a 75 vol just because of the uncertainty of what the management team is going to do. Like I have the option to sell equity or not sell equity, or we might do something or not do something. I have the option to do debt or not do debt. That option is going to move you from 60 vol to 70 or 80 vol. Then if you actually execute the option by selling equity at a premium or by issuing convertible bonds, you move to 90 or 100 vol. So all of a sudden, we had an equity trading with 100. I think today it's like 120 vol, basically double Bitcoin equity. And now here's the big idea, right? The S&P is 15 ARR, 15 vol. Bitcoin is 60 ARR, 60 vol. It has been that way for 4 years. We take a company with permanent capital and we create something which is 100 or 120 vol, 100 to 120 ARR. Okay, now that attracts all the options traders, all the arbitrageurs, all the Bitcoin maximalists. It becomes hot money. The call rate, if you hold a dollar bill for 30 days, you're getting SOFR at 30, you're getting 480 basis points or something like that. If you hold $1 million worth of the S&P index for 30 days, you can get like 15% interest by selling the 30-day calls at the market. If you hold Bitcoin, IBIT, for 30 days, you couldn't sell the options until just recently, but now you can sell them and generate about 100% interest. If you sell the MicroStrategy call option at the market, it's 220% interest rate. Okay, just to hold the share. And so all of a sudden, what we've done is we've created a levered flywheel on top of a product which is already 4x as volatile and 4x as performant as the S&P. The result is our liquidity explodes, our options interest explode, and we do a convert bond in Q1. A week later, we do another convert bond. That's the first time in history anybody ever did two convert bonds back to back, 2 consecutive weeks. Then we do another one in Q2. Then we do another one in Q3. Then we do $1 billion of ATM in Q3. And then we start to get into a groove, and we realize that at the end of the day, the market's going to rally around some leader, and you're either going to lead in a decisive way, or you're going to sneak around and apologetically be opportunistic, or you're going to hide and wait. And so we just decided we're going to lead. I mean, John D. Rockefeller decided to roll up the entire petrochemical industry, and he bought out all of his competitors, all of his customers, all of his vendors. And first he did it for cash, and they would say, okay, well, pay me this. He'd go to the bank, he'd borrow the money, and he'd give him the cash. And at some point, people in the industry said, Standard Oil stock is worth more money than the cash. And he just started issuing the stock. And Henry Flagler, of course, built Florida with Standard Oil stock. And so there's this point in the market where the market decides it trusts you and it wants to rally behind you. And we got to the point in October 30th, and we just said, look, we're going to put the question to our shareholders. Do you want us to basically build this business or not? And after 40 consecutive Bitcoin purchases, after laying the foundation of a Bitcoin, development company, after actually rolling out the KPI of BTC yield, which is, we just sold $1 billion of equity. It was backed by 350 million in Bitcoin. We bought back the $1 billion in Bitcoin. We captured 650 million in the arbitrage. That works out to 4%. That 4% is like a Bitcoin dividend to the shareholders, but we're going to keep it on the balance sheet, roll it forward, and reinvest it. Once we constructed that model, we just said, look, we're going to issue $21 billion of equity, and we're going to issue $21 billion of fixed income, whether it's convertible bonds or preferred shares or corporate bonds. And we're going to do the fixed income to stay levered. We're going to do the equity when it's at a massive premium to the underlying assets to capture the yield and to delever. If you want to get behind us on that, that's the plan. We put it out there. The next day, stock trades up. We outperform every Magnificent Seven company. We outperform Bitcoin. We outperform every Bitcoin company. So the shareholders spoke. I mean, by the way, it's not a surprise to me. I was 95% certain they would like it because I meet with them and they were like, this is the most brilliant thing ever. Yeah, just keep doing this. So after that, we had a good week, and then November 5th came, and there's a red sweep, and all of a sudden you have a pro-Bitcoin White House, a pro-Bitcoin Senate, a pro-Bitcoin Congress, pro-Bitcoin cabinet. Bitcoin rages from 68,000 and 99,000. The short of it is we raised $10 billion in 4 years after our initial announcement. And that's like progressively work and learning. We're learning, and the market's learning to trust us, right? We're building a relationship. My relationship's not just with my equity investors. It's with the convertible bond investors. You meet with a convertible bond investor, say, I saw you last quarter. I saw you, you yelled at me for this and this. I fixed this. I'll do this. We're partners together. I promise you I will do this. I'm not going to mess with your opportunity. I'm not going to hedge it. I'm not going to steal your trading opportunity. I will do this and this and this. The guy goes, well, and I'm looking forward to this future. The guy goes, thank you for your candor. $500 million order. 50. Like, if you have trust and people understand you, they'll give you your money. So what happened next is we raised $13.5 billion in 4 weeks. And if you look at my tweet, my tweet this morning is basically, we generated about a $9 billion plus gain for our shareholders in those 4 weeks. We're making hundreds of millions of dollars a day. It's tricky for conventional investors to understand it because you're not capturing shareholder value creation via GAAP accounting, because for 2 reasons. One, Bitcoin's indefinite and tangible. But two, in the history of 50 years of the capital markets, everybody's been on the US dollar standard, which is zero vol, zero ARR against the dollar. And this is the Bitcoin standard, 60 vol, 60 ARR against the dollar. We don't have the math, the accounting to keep up with that in the traditional system.